Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back to the show.
Jim, pleasure to be back on the show.
John, in May, you presented 5 companies at the Metals Investor Forum in Vancouver. How have they fared in the current bear market for juniors?
Well, these 5 juniors have not, as a group, fared as badly as the market in general. But that's not any great consolation, because just going sideways or drifting slightly lower isn't what this game of high risk, high reward resource junior speculation is all about. The really bad story is, of course, the market interest in resource juniors and non-resource juniors has completely waned. Back in 2021, the Venture Exchange had a $500 million value traded day. Of that, the non-resource listings, they had a day of over $400 million value traded. That is now down to like $15-20 million a day. The resource juniors never quite did as well as the non-resource listings during that great blow-off in the first quarter of 2021. The best they sort of got was about $150 million traded value. And since then, the carnage has been worse in the non-resource listings than in the resource junior listings. And since late December of last year, the resource junior daily traded value on the Venture Exchange has been 50 to 60%, sometimes 65%. So clearly there is a lack of interest, a disappearance of interest in the non-resource listings, cannabis, Bitcoin, cryptocurrency, all these other categories. There's no interest in that. There is bottom fishing interest in the resource juniors, but we're dealing with charts that look like ski slopes in many cases, and a huge part of the problem has been the decline in key metals, copper and gold in particular, and the general outlook of much worse to come for the global economy, also in terms of higher interest rates, possible market collapse. We're facing a potential capitulation in December in this junior resource sector. And to just put it into context, right now of the 1,400, just under 1,400 TSX and TSX Venture resource listings, 41.5% are trading below a dime. Now that's not as bad as in late 2015, early 2016, when 66.1% were trading below a dime. So we have a lot more to go in terms of how bad it can get. But the general mood is one where people are looking at their portfolios and sort of saying, which one of these are keepers? And even the ones that are keepers, those are the ones that are going to be higher priced. But if you're facing a complete capitulation washout, should you even stay long? And my suggestion has been to my subscribers that it's possible everything could end up being a lot cheaper, and you should look at your resource junior portfolio and just get rid of the companies where management has not really gone to bat for the shareholders, where the story really doesn't have any traction. Just get rid of those now, because there's going to be a washout in December where people just say goodbye to all their losers and then look at the first quarter of 2023 as a turnaround. And of course, I'm saying there's all these negative expectations built into the market, but things may not turn out as bad as anybody looking at the situation would anticipate. And you shouldn't have all your money in the resource junior portfolio. It should only be a portion that is your high risk, high reward money. And the attitude I'm taking is, okay, I'm going to put my head in the sand and pretend that all these negative outcomes are not going to become reality. And the rationale for that is, if these negative things come out and my resource junior portfolio gets obliterated, who cares? I have much bigger problems on my hands, the world has in general, and it doesn't matter if that was wiped out. But if we go through this final quarter here, the midterm elections, what Xi Jinping does after he's confirmed as the leader for another 5-year term, what Putin ends up doing with regard to his losing situation in Ukraine, it could be that all these negative scenarios that we're anticipating really don't happen, and we could have a rebound in the first quarter. So that's the way I am looking at it. Of the 5 companies, 2 of them, P2 Gold and Vanstar Mining, those have projects that are advanced feasibility demonstration projects. Ironically, they have done the worst because people can quantify the numbers and sort of say, oh, well, here's what happens when copper's at $3.30 and gold at $16.30. The other 3 are exploration juniors, Adamera Minerals, Searchlight Resources, and Zephyr Minerals. These have largely done nothing in the past 4 or 5 months, and their projects are still intact. They're still working on them, so I'm still quite comfortable with them. And I would say as a group, they have not done as poorly as the market in general, and I'm still pretty much supportive of all 5 of them.
John, let's start with P2 Gold, one of your KRO favorites, which was working on the Gabbs copper gold project in Nevada. What is needed to reverse its downtrend?
Well, P2 Gold optioned the Gabbs copper gold project from the Waterton Group a couple of years ago. It hopes to have the first economic study, a PEA, out by the end of this year. I've done an outcome visualization where I use some simple life of mine averages and the kind of costs you would expect for an open pit mine that does both heap leaching and sulfide milling. And that scenario has not fared well at gold now at $3.35 a pound and copper at $3.35 a pound and gold out at $1,635 an ounce. However, the company's strategy has been to optimize the flow sheet, to focus on heap leaching the higher grade gold oxide resource at surface, and then transition using cash flow to fund the capex, transition to mining the deeper copper rich sulfide zone. And although I don't think the PEA is going to look particularly good, it's going to be important because it will benchmark the costs of putting this into production on an optimized scenario. And the market realizes that, okay, this is not going to be something that's going to trigger an instant buyout. So the stock has sold below 30 cents. And once they file the PEA, it starts the clock ticking for a balloon payment. And Waterton, which is also the largest shareholder in the company, it's going to have to decide, does it just end up taking the project back and end up with majority control of a shell alienating Ken McNaughton and Joe Osimic, or does it figure out some deal how to keep this alive, ride out this downturn in metal prices? Because I can't speak for gold. Gold will do what gold will do. Nobody needs it for anything, so there's no demand drivers. But copper definitely has demand drivers. There's not a huge amount of new copper supply in the pipeline. And right now, the price is down because the world's anticipating a major recession caused by the effort to subdue inflation through interest rate hikes. The reason to stick with P2 Gold is they have completed almost 14,000 meters of drilling at the BAM project. Now, this is a gold target in the Golden Triangle, and exploration has pretty much shut down in the Golden Triangle because winter is coming in. They still have 59 holes to report. Now, the disappointing thing about the BAM drilling is they did not feel comfortable drilling deeper, expensive holes targeting what they infer to be the feeder source for this epithermal gold mineralization near surface. So these holes have largely been designed to complete a database for the near surface portion that might be open pittable, and to use vectoring and zonation strategies and then combine it with the geophysics, which they were late getting because of some weather-related problems, and come up with a plan for next year to drill some deep holes to find the rich feeder system. So P2 Gold, I still like it. I'm not happy that it's down from that 50-60 cents level where it was during May at the Metals Investor Forum. But management has put real money in at prices higher than the current level. They're still behind it. Gabbs, it is at this point a bit of an optionality play, and we do have to see Waterton play some ball and cut them some slack so that they don't have to try and raise a big balloon payment to finish completion of vest for title to the Gabbs project.
Vanstar is an advanced gold resources junior that's trending lower. Is Vanstar's future still tied to that of partner IAMGOLD?
Yes, it is. And IAMGOLD has been a worrisome situation that at their Cote Lake project in Ontario, a big giant open pit operation. It had a capex blowout. The lenders were unhappy. The stock has been under pressure. The company appears to have made a strategic decision. We are going to retreat to a safe jurisdiction, Canada, and they just announced this week the sale of the Rosabelle project in Suriname. It's an operating mine to a Chinese company for $360 million US. The creditors approved of this, but said all that money, the proceeds that you get, it has to go into finishing developing the Cote project. And of course, the assumption is that gold at some point will develop an uptrend, achieve a higher real price, and this mine will be a huge cash cow for the company. But what this means for Vanstar is that the Nelligan project, in which it nets has a 20% carried interest, while IAMGOLD has the sort of 80% interest and is the operator. That's not exactly a high priority. So the next thing we want to see with IAMGOLD is what is it going to do with its Essakane project in Burkina Faso. Now we know the whole Sahel is just turning into a jihadi mess, and the French have been kicked out by the various governments in Mali and Burkina Faso. We're now seeing the Russians with the Wagner Group coming in and offering their support for the dictators that are in place. This is probably not the best place for a company to have an operation. So the hope is that they sell Essakane next and get enough money in there so that they're no longer in the doghouse as far as the creditors are concerned. And if they do that, then it becomes clear that they are reverting back to Canada as the place that they want to build themselves as a gold producer. I did an outcome visualization over a year ago for the Nelligan project. It has about a 3.9 million ounce reserve of around 1 gram per ton, and it still looks pretty good. If you actually took the NPV seriously on that, you're looking at a potential future price, $1 billion NPV Canadian for the entire project, and Vanstar's share of that would be about $2.80 a share. Right now, it's at a tenth of that price, so 29 cents. And the stock is sinking because the market does not see any timeline for advancing this project. However, IAMGOLD is planning to produce a updated resource estimate. They've done a lot of drilling since the last resource estimate in 2019, and the hope is that they can get the grade up to 5 million ounces and not sacrifice, the ounces up to 5 million ounces and not sacrifice the grade, keep it at around 1 gram per ton. That's what we're looking forward to, and then we'll want to see what are their next plans. There's still some holes that they need to stitch together in the overall system before they know this is what the open pitable potential is. So we may see some more drilling in the new year that sets the stage then for shifting into economic study mode. And that's what the market wants to see, is that IAMGOLD finally has the flexibility that it can throw a little bit more effort into the Nelligan project. Vanstar does have still some pending results from the Bosquet project, which it option from IAMGOLD. This is one of these orogenic systems that's not far from the Doyon mill, which is not operating at capacity. But I don't get the feeling that the idea here is to chase these structures down plunge and find that they blossom with width and grade. But I'm not really expecting anything spectacular there. The company can rest for next year. They don't have to spend. They can keep the option alive. So in a sense, Vanstar is kind of a company that's in a holding mode, and it's, in my view, undervalued. I do think Nelligan will eventually become a mine, but until we see that shift in attitude towards IAMGOLD happen, that stock is not going to develop a significant uptrend, and it's best to look at as a long-term accumulation target. This kind of stock is vulnerable to a year-end capitulation washout where people say, well, the company doesn't really control its destiny. It's in the hands of IAMGOLD, which itself, its destiny is controlled by its creditors. So maybe I'll sell this now and buy it later. But I'm, again, as I mentioned earlier, pick these companies that represent solid value and, accept the price that you are, that it might go lower, and have some cash on the side to average down on stocks like Vanstar.
Adamera Minerals is a gold discovery-focused exploration junior. Is it any closer to making a discovery?
In the past few weeks, there have been signs that they are closer to making a discovery. They are focused in northeastern Washington. For the past few years, they have been farther east in the sort of Overlook and Lanefoot area, that what they call the Cook Mountain Project. Hochschild had that under option. It's looking for these high grade systems, and it dropped out this year. So they have 100% of that. Hochschild funded a bunch of IP surveys that led them to do some drilling, and they produced a surprise result on the Lanefoot South. This is just south of the old Lanefoot mine that Echo Bay operated. That produced about 1 million ounces at 8 grams per ton. And these are fairly small zones that are not so easy to find. And the assumption has been that Echo Bay will have looked around and pretty much killed any potential. But they've been doing, with these help of these IP surveys and other geophysical surveys, they've identified targets, and they managed to pull an intersection of 4.7 grams over 2.7 meters. It's about just south of the border with the Lanefoot mine property, and they also got a 1 meter interval of 21 gram per ton. So the trick there is to sort out, okay, these are small, sort of poddy, linear type bodies. Can we figure out where to go next? It's relatively shallow, so they're not drilling deep holes trying to spear a minnow at 1,000 meter depth. So the Lanefoot, the Cook Mountain Project, which the market had pretty well written off as dead, is not quite dead. But where I've got my hopes on, and this was the reason I had them at the Metals Investor Forum, is the Buckhorn 2 project. They, in essence, own all the surrounding land that Kinross once held. It, of course, kept the crown jewel, which is a depleted deposit, Buckhorn 1, that produced 1.3 million ounces at about 14 grams per ton, a hugely profitable underground mine. And Kinross had messed up in the past decade. It wanted to go for a monster plan of operations to do a search and destroy drilling campaign on the larger area, but it ran into opposition from the permitting bodies, in particular the U.S. Forest Service, and it eventually threw up its hand and just reclaimed the mine, shut it down, let all the claims lapse. And that's where Adamera showed up. Owns all this land, has attracted the former Crown Resources people like Mark Jones and Chris Harold as backers of the company, and they have been doing geophysical work, geochemical work on the surrounding area. They have permits for the state and BLM-owned ground. They started drilling, and they're still waiting for the U.S. Forest Service claims to be permitted, and these sit on what they, I think, consider to be their better targets, but they've been drilling these other geophysical targets. And this week they put out some promising news. Three of the targets that they've tested have yielded sulfide mineralization. Now, sulfides are a necessary condition for gold mineralization in this skarn camp, but not a sufficient condition, so we will have to wait for assays. But what the market was happy about is that these geophysical targets that they've developed, they are turning out to be sulfides and not something else. And if you have a sulfide intersection in this district, you have a shot at a gold mineralization, and the key here is to find another buckhorn deposit, 10 to 15 grams per ton, million plus ounces, and redevelop it or develop it as a underground mine, highly lucrative, perhaps even truck the ore all the way to the Kettle River mill, which is still sitting there mothballed. So Adamera Minerals is still pretty much in that 5 to 10 cents range that it started out. And it has started drilling and is starting to get results that are encouraging. But we're closer to a discovery, but I wouldn't yet say we're at emerging discovery. There's still not enough data to say, wow, here's something that because the market's so bearish, it's ignoring that you need to own right now. But it is a stock, if you're looking at the longer term picture, that this is an exploration junior with a great story. Again, it's not going to go too much lower than the current level because it has a good supporting shareholder base.
John, Searchlight Resources is a Saskatchewan-focused junior with exposure to a wide range of metals. Is it any closer to delivering a discovery?
Well, a discovery requires a drill hole, and this year they did not get any drilling done. In the Bootleg camp, which is just west of Flin Flon, that's a gold district where they have stitched together a lot of the old claims that used to be had a fragmented ownership, but there hasn't been much market interest in gold exploration. So this year they have focused on the Kulik Lake project, where last year they flew a special type of geophysical survey, which was intended to help them better understand this system of monazite zones that have some very high rare earth grades in it that were discovered decades ago. Academics have written about it. Eagle Plains staked it at one point a decade ago and did a little bit of work. And in fact, the assays that were produced, I put them into a database and averaged them out, and the one sample that the average grade of like just around 16% total rare earths, it's clearly a light rare earth deposit. Monazite, of course, is mainly light rare earths, so it's about 97% light rare earths and 3% heavy rare earths. But the value all falls into the neodymium and the praseodymium content together. They are about 84% of the value. And the rock value at that grade is $4,500 a ton. So that's huge. That's like a 3 ounce gold deposit. But that's not what this story is about. That was trenching done on distinct outcropping monazite zones. The trick here is to do a sort of develop a tonnage scenario with a lower grade. So if you drop that from 16% to say 1.6%, you're dealing with a $450 rock. If you can get this, show that there's a zone of 5-10 million tons of 3%, then you're dealing with $700 to $1,000 rock value. Now that's a serious rock value, and monazite is a relatively simple mineral for the rare earths. In fact, the Saskatchewan Research Council has set up a processing plant that's dedicated to processing monazite, and it's kind of setting the stage for what I think will be a very big switch in interest in rare earths. The rejuvenation speech that Xi Jinping gave this past week about how China is going to basically square off against the United States and demonstrate that autocracy is superior to democracy. Once he's confirmed, there's a risk that he might move quicker on Taiwan than everybody hopes. And if that does happen, we have to really reconsider where all these materials that China dominates in, such as rare earths, are going to come from. And that was the theme of last week's Kaiser Watch episode. And Saskatchewan's a place that has potential for these rare earth deposits. Kulik Lake is one of them. The company has done several passes of sampling. They don't have the results yet. They also went, as part of last year's geophysical survey, they recognized this uranium anomaly, on trend to the south, and they've done some work there. And no, it's not going to be a 1% open pitable uranium resource. It's going to be a lower 0.05, percent type of Rossing style system. So they may look at that later next year. That's where you're going to need to put some drill holes through it and see, okay, what sort of tonnage do you have here at what grade? But the exciting part is the going back in there next year, having figured out where the trends are on this Kulik Lake, having demonstrated that it's bigger than the little narrow zones of monazite that were looked at before, put some drill holes across it and start showing that we have a monazite mineral dominated rare earth system of 10 million plus tons of 3% or better, and that will put this company into the limelight. The other thing that's going on is this week some claims to the north of the Hansen Lake area that had been held by others for who knows what reason came open, and the Saskatchewan Mars system made them available for staking, and Searchlight was able to go in there and stake this area because it has a potential pegmatite field. And again, lithium is now the big theme. The Hansen Lake area to the south is known for some pegmatites. They're not known to be high grade or anything. They had optioned them on easy terms to a private group which was mainly interested in the VMS potential, and but they don't seem to have done any work, so they may be getting that back, and we're still waiting for formal confirmation that they have staked these claims, but they are looking at the lithium pegmatite potential of Saskatchewan, so that could be an extra bonus for Searchlight in 2023 when it goes to go get serious about the Kulik Lake rare earth potential, and may also have a lithium pegmatite field play on its hands.
Zephyr Minerals is trying to establish itself as a gold junior in Zimbabwe. Is it any closer to doing that?
Well, they applied for these exclusive prospecting orders back in sort of June of 2021, and they were expecting a one-year turnaround sometime this summer. They still have not been granted any of these EPOs. They think that based on conversations they're having with various bureaucrats, that this could happen in November. The country, meanwhile, has been flooded by many, many more EPOs. Now, the story with Zimbabwe is this country was in the mining doghouse for decades while Mugabe was in charge of it. They created rules where foreign mining companies couldn't have majority interest in any mineral assets. So the gold potential of the company ended up being dominated by small-scale artisanal workers who are very good at finding these orogenic vein structures where they outcrop at surface and chase them down to the water table where it becomes too difficult for them to continue mining. But several years ago, Zimbabwe finally emerged from its autocracy, became a democracy. So far, still seems to be on track as a democracy. There's an election coming up next March. Hopefully, that shows that yes, we are going to be a democracy. They changed the rules so that foreign companies can have majority ownership, and there was a flood of Australian companies, others, ones like B2 Gold. They did come in 2021 and applied for this first round of permits. Zephyr Minerals was a little later in the game, but they've been doing their own homework and they've got their applications in. That means pretty much they're first in line to have them granted. And the idea is to focus on these areas where there are these old artisanal workings where it has been depleted, but look at it from a bulk tonnage perspective, such as has been done in West Africa so effectively during the last 3 decades. And this is where Zimbabwe completely missed out with modern open pit bulk mining technique for the gold potential. And Zimbabwe has been a significant gold producer for much of the past century. And so hopefully we get confirmation that they have this gold system. But the other development, which is the reason there is this flood of applications now in the system, and who knows how long it'll take for those to get granted, is Zimbabwe's lithium potential is back in the running. Now, during the 50s, 60s, 70s, Zimbabwe was an important lithium producer, and not so much for the spodumene that is now the basis for battery-grade lithium, but more for the petalite, which is a more pure form lithium mineral. which is preferred by the glassware and ceramic industry, which was the primary user for lithium for many decades until the lithium-ion battery became part of laptops, and now, of course, it's part of the electric vehicle. And if the predictions are correct, if we do have an electric vehicle replacement of internal combustion engine sales by 2035-40, the world is going to need 10 times as much lithium production as it's getting now. So many of these orogenic gold systems are parallel with these pegmatite swarms that in Zimbabwe host both petalite and spodumene. And the spodumene has been ignored because it's dirtier. The ceramics industry didn't want it. But now it is the preferred concentrate because it concentrates to 5-6%, whereas petalite concentrates to only 3.5% lithium. So the hydroxide and carbonate refineries, they prefer a spodumene concentrate, and there's now a revival of interest. Sinomine bought the Bikita project for a couple $100 million, and more importantly, an Australian junior called Prospect Resources, which during Lithium Mania 1.0, it moved into Zimbabwe and secured the Arcadia project, and that's about 71 million tons of 1% lithium oxide. In December of last year, it got an offer from a Chinese company, Huyu Cobalt, 378 million US cash. That closed in April. The company, which is, typical 400 million share type Australian company, had gone from sort of 10 cents all the way up to $1. In August, they paid out $343 million as a dividend, and sort of stocks back to sort of 10 cent level. But they kept about $30 million in the treasury, and they have one other project in Zimbabwe that's lithium based, and they've also picked up lithium assets in Namibia. But the importance of this message is that there is now strong interest that the Chinese obviously are not going to muscle into Canada and the United States very well. Even Australia, they'll have problems. They'll be definitely doing deals in the lithium triangle of South America. But Zimbabwe, it's in Africa. Zimbabwe used to be one of the biggest lithium producers in the world. Now they're going after both the petalite and the spodumene. So there's a complete rethink of Zimbabwe. And the beauty for Zephyr Minerals is one of the applications that they're hoping to get in November includes an entire 15-kilometer or so trend in which apparently pegmatite bodies are known to exist. What their lithium grade is and what the mineralogy is, that remains to be found. But if they get this granted, the company goes from being a gold junior hoping to break into Zimbabwe and take these old artisanal structures worked by artisanal workers and turn them into bulk mineable gold systems. They'll also be able to run parallel exploration of these pegmatites. And with Zimbabwe shifting to a democracy and allowing foreign capital to develop its resources, this is a pretty good space for a little 10-cent company to be in. And, stock hasn't done anything since May, but this is one where if they can get that exclusive prospecting order granted, that will be a very interesting junior.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.